And I will share my screen.
And welcome everybody to March 2024. We're going to hear about February. I feel like there were some things that happened end of January, so there could be some bleeding over of that. But Don, tell us all the great news happening. I always try to put an optimistic spin on things, but over to you.
Well, David, thank you so much, and glad to see everyone here again. I think I cheated at the end of January and included some things that were early in February, so I may be repeating this time. But let's move ahead and take a look. February was another up month, almost 2 billion more than we saw February last year. 6.6 billion, 162 companies. We're now at 15.6 billion for the year. And you can see how that compares to previous years. Of course, the granddaddy of all being 2021, in which lots and lots of money got put out there. Zero interest rate period, or ZIRP for short. So we're not going to be repeating the ZIRP period this year, but we're off to a really good start. Let's take a little bit more of a look here. The 6.6 billion breaks down very much as we have over the last, I think almost a year, with AI taking a very large chunk of the funding. And when we look at mega deals, which are fundings of 100 million or more, you're going to see that they take an even larger chunk of that 6.6 billion, almost 2/3 of it, as a matter of fact. So lots of money going out, much of it going to AI, but not exclusively. This month, we saw biotech, we saw security, cybersecurity, we saw fintech raise its head again, which has been pretty quiet for the last year, but there's a resurgence of interest there. And as we'll talk about when we get into a little more detail on the companies, across the board in almost all those areas is AI-driven applications. You know, legal, customer service, cybersecurity. The founders are using AI to superpower what they were doing previously, or in some cases, these are disruptors. They are brand new applications that are AI native, and they're coming in and quite frankly taking away significant market share from some of the existing application developers. So let's take a quick look at the mega deals. So 4.4 billion of that 6.6 billion went out in rounds to individual companies of 100 million or more. And here, again, AI, you had one company walking away with 1.5 billion of that, and that's Grog, and that is AI hardware. We're seeing many solutions for how do you speed things up? How do you get faster hardware? How do you increase the speed of every component within the system? And there's a lot of money going into that. Grok took 1.5 billion of it. Then you see Lambda and you see Together AI. Both of those are running inference faster. Places that you can go to train your models, to use other people's model. You can have it in the cloud, you can have it on-prem. You know, we have expanded dramatically over the last year in the number of companies that are offering different solutions, different takes on what you're going to need to train, drive, develop your LLMs, your applications. So we see that here. A bridge AI, let me hold a bridge, and then in charge AI, again, these are more, that happens to be a hardware and software solution. One of the interesting things here is that if you look at all of those AI companies, they're all later stage. We don't have any early stage, Series A or seed, large fundings this month in the AI area. And that's a relatively new development. AI large rounds for very early stage companies have been more the norm over the last 6 months. So getting over to the other side, I told you last month that what we're seeing is more money now, rather than to the pure AI plays, more money also going into the application side. You know, customer service is big, legal is big. We're starting to see the application of AI into security and well as information technology. How do you use it to secure your systems? How do you use it to improve your development? One item of note here, Icon Therapeutics and Prenovo. This is the exception to the rule. Both of these companies don't mention AI anyplace in anything they're doing, but they are both of them run by serial entrepreneurs. Icon Therapeutics is going after, they call it wasting diseases, but it is an arena in which we've seen a lot of money being put. They're the latest. Prenovo, or Nuvo, is an interesting one because they have a variety of very high-priced equipment now that will scan you from every angle possible for early detection of many, many types of cancer, of blood illness, of you name it. They say that their goal is to make all of this more accessible to folks. Their low end is $7,500 a year membership. Their high end is $15,000 a year membership. So accessibility is in the eyes of the beholder there. Okay, let's zip on from here. Well, we came up to 3% of funding. 238 million of that 6.6 billion went out to women-led companies. And again, we're very low because out of all of the companies that we were looking at up here, these are the big number fundings that are driving the totals, and none of these companies are run by women. So the result is that we're down around 3%, 3.6% to be exact. What we did see this month, and we'll get into the companies in a minute, is a number of Series B, later stage, and medium size, anything from 12 to 30 million. And David, don't forget to stop me if I have any questions that we can answer as we go along. So I picked out just a few of the interesting companies. There were 19 companies this month that received funding and were led by women. Over on the starting at the right with Millie, a maternity clinic. This is another manifestation of femtech, which has taken on a new lease on life over the last year. This is a maternity clinic. There have been a variety of other woman-focused health plays. And for those of you that are pet lovers, you will appreciate Loyal. This lady, she's the founder as well as the CEO, and they started out to develop drugs to extend the lifespan of her dogs, and they got their funding not just for that, but because the vision is to take what they develop there and move it over into people. But because the regulatory issues around people and developing drugs and testing drugs and bringing them to market are much more complicated and much longer, they're doing their first plays into dogs. And finally, we have, again, 3 applications in the software arena, software infotech arena. You know, Collate is using AI for, this is medical device, it's diagnostic, it's drug development, but it's taking and it's streamlining paperwork. Now, it seems basic, but these are areas that companies spend a ton of time on. And Pinkfish takes a slightly different take on things, and it's purely AI in enterprise workflows. How can you automate something that takes you 8 steps to do and do it with 1 click? And then no AI is archive resale. And the resale arena, we've seen 3 new companies come in over the last year. This is the most advanced, and they're not just reselling themselves. Their take is providing a vehicle for brands to resell. And as you can see, they're doing quite well, 30 million in a Series B this time around. So let's talk just a little about AI companies that got funded. There's so many of them that I basically just broke them into arenas so we can talk about the arenas that are seeing more and less funding. You know, compute, we already saw Encharge together, Grok, Lambda, Base 10, Positron, and WITI are all, well, Base 10 and Positron are takes again on how do you provide more compute, preferably for less money and less power. WITI is interesting because it's named directly at data centers, and it basically enables data centers to use AI and be more automated, require less people intervention, less human resource. LLM tools keep expanding every month. We see new companies coming out. The LLM tools originally expanded into how do I use different models? How do I fine-tune my model? Now half of these companies are around how do I make my LLM safe? How do I make it trustworthy? How do I make it explainable? And we see a continuing flow into app development. FAL, incidentally, is an acronym that stands for Features and Labels, but that's what they run under is FAL. And future AGI, also application development for enterprise. And by and large, most of these companies, particularly the tools, the app development, they're all focused on enterprise. That's where the money is. That's where the VCs are willing to invest, eager to invest. We had just one foundation model company funded this month, or February, Lambda Labs, and that's a foundation model specifically focused on making biology programmable. And that's very early stage. We'll see more about it later. On the other side, we're again, early on, we saw lots of data tools. How do you clean? How do you source? How do you expand? How do you do synthetic? This time around, there's just one, Pulse Software. And the bulk of the companies, numerically being funded, are all around AI agents, AI assistants, or simply AI-driven and infused applications. We look at how much money is going into the funding of the foundation companies, the OpenAI, the Anthropic. As a matter of fact, at the beginning of March, literally day 1 of March, Anthropic closed on $3.5 billion for their next round. OpenAI, of course, $6.6 billion on their December round. But the amount of money that call them the big four, are spending on AI-driven capital spending is it's stunning. I thought you'd appreciate this graph. This is capital spending by company, and it's quarterly. So you can see Amazon is putting out $25 billion, actually a little bit more than that. I think it's 26.5 billion each quarter. And this is primarily, it is data centers, it is CPUs. It is everything that goes around the power, the compute, and the physical locations needed to drive AI. Microsoft, Alphabet, and Meta. One of the handouts, David, you have this along with the deck. It's just a summary of quick takes, information we gather over the course of the month we include with our newsletter. And there has been a steady drip over these companies and what they're spending, how they're collecting GPUs, how they're developing their data center programs, finding the power they're going to need. There's not right now a lot of focus on how they're going to minimize impact on the environment, for example, but maybe we'll see that as time moves on. But again, these numbers are just amazing. Combined quarterly, these four companies are putting in very close to $75 billion. And take that over the course of the year, you've got a lot going in. So I want to talk a little bit about the VC component of the startups we track. I think I showed you this last year. 76 billion is what they raised. We're not going to have any figures in on new VC raises for probably another month and a half. All I have is anecdotal information, and I can tell you that we're seeing probably just a little over 3 times as many funds raised by VCs in the last 2 months as we saw in the last quarter of last year. So when I say a new fund, this is a VC bringing in money from their limited partners that they can then invest. And last year was pretty quiet. 76 billion, that figure there is the smallest in, I think, back to 2014, a long time. And it was raised by 75% of that went to just the top 30 firms. One firm raised 16, Andreessen or 11%, Andreessen Horowitz. And those numbers have been driving the narrative that VC is getting much more crowded. It's getting less crowded because a lot of the early stage emerging managers are dropping out, unable to raise money against what is a very, very, very challenging environment. So the model, the VC model, one of the narratives that's been out, and it's the most common, is that the VC model's broken, that fundraising the way they have been doing it can't continue. And that goes back to the fact that most VC funds are 10 years in length. And now, well, as we see, go to the next slide, companies aren't exiting in 10 years. They're taking a lot longer. There is a thread, and you have the link in the notes that that you'll receive, to Signalfire, who's one of the more vocal VCs about changing the VC model. There's another link and another narrative being put out by another VC called NFX. And NFX's proposition is that they see the numbers, but the numbers aren't reflecting a groundswell of VCs, small ones, new ones, that are being turned out on a regular basis by a few of the VC incubators in the Valley. And that actually what we're entering now is what they call VC 3.0, the golden age of VC. And that VC is only going to grow and prosper between now and the end of the 20s. And in fact, from a startup's perspective, they expect there to be more VCs, more money, more opportunity. So I encourage you to read both of those opinions and come up with your thoughts on it. But now let's look back at And again, this goes towards the VC numbers, the VC model. February, lots of acquisitions, but not much in the way of money. Out of the 34 acquisitions we saw, 24 of them were no dollars disclosed, which generally means it's not a happy acquisition. We don't have necessarily the knowledge of whether it's they were about to go out of business and that's their last option. But these are all small companies being acquired by larger companies. Out of the, let's see, what is that? 9, the ones that were disclosed with money, the largest amount of money for an acquisition was 250 million. Not the billion-dollar acquisitions like the Figma acquisition that was hoped for last year, that really puts money back into the valley. The one acquisition that was really notable, pretty high profile, in February was Humane. They put out something, an AI pin that was supposed to be a companion. You could wear it, you could talk to it, it would provide you with information. It never took off, got terrible reviews. They shopped themselves for $1 billion. HP ended up buying them for 119 million. And they immediately killed the pin. What they wanted were the engineers and some of the tech. Humane got in 230 million in funding, so nobody was very happy out of that exit. We're still sitting at 1,300 some VC-backed companies, more than 500 million in total value, and 2024 there were 40 exits. So you're looking at more than 30 years at that pace for all the money to come back to the investors, come back to the founders, and the virtuous cycle to continue. Not a good runway. Another figure of note, we now have 760 unicorns in the country. Total value, 2.7 trillion. Most that have ever been, and many of those, most of them are later stage. They, for the most part, don't want to move to an IPO, and there aren't a lot of companies big enough to buy them. The IPO market, we're hoping will come back, and we've now had one very significant AI company. It's not a Valley company, it's a New Jersey company, CoreWeave, has filed for an IPO, and we expect that to happen in the next few months. And that will be our first indication of the health of the IPO market, given a company that should pull in a lot of interest. So in the interim, we've got a lot of alternatives. We've got a lot of alternatives for the founders, for investors, to get some liquidity, to get some money before the company goes public, is acquired. And that comes down to secondary sales. And we are seeing more secondary sales than ever before. In the last month deal, that 300 million was entirely a secondary sale. It gave their early investors and their employees a chance to cash out. And right now, Mercury is looking for 300 to 400 million, all secondary. Plaid, same thing. And Stripe, which has done 3 secondary sales so far, is doing another one. And they are interesting because the valuations on these companies that were last funded in 2021 have all, without exception, if they've had to come back for funding, they have generally gotten lower valuations. Stripe, over its last 3 secondaries, has had a higher valuation each time. This round, it's at 91.5 billion. Its high was 93 billion. So they're almost to where they were valued in 2021. That's an exception to the rule overall. And you think it would make them more eager to go to the public markets, but that hasn't happened. And they've said explicitly they're in no hurry to do so. Let's see. Well, what did I do there? Come back here. Okay, and just a brief review on the public markets.
You stop sharing though, Don, just FYI.
Oh, sorry. Let
Problem.
me. How did I manage that? There we go. I clicked the wrong button.
So yes. Okay, there you go. Now you're good.
Yeah, and we're back to this. Let me get back to, geez, yeah, I know it's being transcribed. Everything is about where it was last month, except what was down is down further. What was up is also not up quite as high. The stock market has taken a hit, a couple of hits in the last month. But the only things that are doing well in the stock market right now are all AI related, whether it's hardware or whether it's Reddit, also AI related, although in a tertiary way. So we don't see this changing soon, but we're hoping over the next 6 months we start to see CoreWeave and some of the others come out, put some money back into the Valley, the founders and investors. Okay, so all of the information we've got here comes out of the research Bob and I do for the Pulse. That goes out 5 days a week. It's on fundings, it's on investors, on executive moves between companies. And it's the most comprehensive compilation you'll find. We also provide a variety of notes, quick takes, and you'll see some of those in the handouts today. And at LinkSV, we follow the startups. We track fundings, we track exits, we track what's happening and who's going where. We do the research so you don't have to. Back behind the newsletter is a huge database of 20 plus years of information. And for those people that don't want to pull through the newsletter and go item by item, we offer alerts to tell them just the events they want to know about in real time. We also provide an accelerator program, all of our resources free to companies in accelerators. And we do our best to help entrepreneurs who are raising money with our flexible fundraising program. That pretty well covers it, David, and I will turn it back over to you. Thanks, everyone, for coming today. And now I will stop sharing.
Thank you, Don. Anybody have any? Actually, I'll